So let's jump into another fast hedging series. If you've been watching each one of these, you'll see I'm in gains on every single market cycle. It doesn't matter where the market goes, how it goes. It's just simply down to money management overall. Trading and getting things right largely is money management. Of course, you need to make entries at the right time, but you also need to be able to manage your entries in a way that is completely sustainable. And most people who lose money trading just don't do that. So this is going to be another demonstration. Of course, if you want this to work, you need full rules. Okay, you need all of the portfolio rules, the risk balance rules, the sizing rules per equity, everything like that. What I'm running through now is quite brief and touches the surface. Now, we normally do a 0.1 max size for this equity, just so everyone understands. 0.1 is the max size, the lowest size 0.01, and those are the kind of boundaries I try and stick within to really give everyone the easiest sense of what's going on. It's just an easy way to gauge it. My maximum drawdown as well is going to be 1% of my equity. Now, obviously, the sizes for every asset change in the real world in my portfolio, the sizes are also based on the equity and various other factors. Like I said, if you want to learn, just go underneath this video. So because I don't have a massive amount of price action or price data to go off, I'm just going to take a light long to begin with and let things run fairly quickly. Okay, so a nice big push up there for gain 1. I'm going to add now a short, again lightly, because there's not an awful lot of price data to go off. Okay, another gain there, bit of rejection coming in. Oh, okay, so I could take another one. All right. Now that was a big push where I missed the gains, unfortunately, but it won't make a difference really in the long run. I'll add a short there. Okay, and we should start to get some market direction. So I'll add another short because we're pushing up. Okay, and there's some gains. Excellent. Now I can hedge my former short immediately because I can see price supported. We have now dropped completely under that long and then back above it, so we'll kill that. And now there's a bit of rejection, so I can add another short, and then a big push up again. I'm going to add another short. So now I've got a reasonable amount in play, and we should start to rack up some drawdown, and then we can easily display how one would hedge. All right, so good pullback there. I can kill that short, and now I can hedge 1/3 of my total short side entries. Weak push, so I'll kill it early and add a short. Okay. And anything considerably higher, and I'll add again. Now, that is not quite the pullback I want. I want it a bit lower to that early support just below. There we are. Something like this, really handy for a long. Okay, push back up to the highs, close position for gains. We've now got 3 0.02s. Okay, and remember the max size over, a given pip period, like I said, all those rules are inside, it's going to be 0.1. Typically, that's going to be about 200 or 300 pips. I would stretch one max size out on. Okay, so not getting too much here. We are getting a bit of consolidation. So what I'll do is I'll look to hedge long. Well, I will have if I could have. It's just too quick. I can add short again here. Okay, so I've got a 0.1 in play now. And I can kill my last one, and I can hedge lightly to cover some of this risk. Okay, big fall now. I want to add a hedge, and pulling under that former short, I'll kill the short side gains. Pulling back up, I'll kill for long side gains. So very small gains there, but gains nonetheless. Okay, big pullback, and I will exit. Okay, bit there. And I'll add long. Let price run. So now I've got a decent amount of my short side entries hedged. And because my drawdown is still low, any significant pop back up, or maybe a minor pop back up, and I can add short again. Now I'm changing the sort of amount I'm entering in and out because we're trading the dollar Swiss. And I know the dollar Swiss likely, as an asset will deviate a lot lesser than things like your yens, gold, SPX, all those kind of assets that can really stretch. For many years, the Swiss franc has shown strength over various currencies, but I don't know the exact price action on a daily basis, so that's why this is still possible. Pull away there, still got a hedge up top. Any fall lower, and I can hedge on again, probably kill off a short. Okay, that's what I'll do. So I'll kill my latest short there with the gains taken, use a tiny part of it. Have I added long? No. Add long, just in case you get a pop. It looks like you're getting a bit of sideways movement, so I wouldn't be surprised if we do continue to the upside. No, we've fallen, so I'll add again long. Any pull lower, and I can kill those shorts. Now we're starting to see a bit of upside momentum overall. So what I am going to do is I'm going to kill off that short. Okay, and I'll short again higher up. So gains there. You can see a little bit of downside market movement overall. A little bit of a waning of price, giving me these entries. Probably add long as price is supported fairly well. There we are. Reasonable push. Short again. Good drop there. Re-long there. And because we're hitting this key support, I've got the chance now to kill off that. Okay. Right, so now we're really falling. This hedge remains, but we've taken reasonable gains so far. So I'm actually going to leave that hedge on because there's a bit of weakness in the market. Any decent push up, back up here, and I'm going to short and probably exit the long. So price is now struggling. I wouldn't be shocked if you get a bit lower. I don't have much in play, which is good. So this is a very tight drawdown cycle. Okay, so now pushing lower, coming to some reasonable support. I'm going to add again. Okay, anything lower, and I will add some more. So I've got 0.2, 0.2, 0.2. I'm going to add a 0.4. That makes one whole max. Kill that early off on the first point. Anything much higher, and I'll start to hedge those longs I've got up top, which you can see. But I want a reasonable pullback like that. Perfect. Excellent. Take a light 0.02. And then again, anything higher, I'll kill off the longs and I'll re-hedge again. So that was more of a protective hedge, just in case. So it's either going to go up or it's going to go down, doesn't matter what way. You can see my equity drawdown is very reasonable. Okay, max drawdown being 1%. Okay, equity drawdown. So getting to 99,000 basically. Of course, you would run a full portfolio of assets and you would make a lot more in terms of profits than this. We're just waiting basically either way because we don't want to jump in and hedge yet. So it needs a bigger push. So still waiting, I'll speed it up. There we are. So a bit of momentum in there. Now I'll close that. So at this point, we've fallen, up top from 0.98 all the way to 0.91. Okay, good 700 pips or so, and drawdown really not hurting us at all. Can add another tiny long, half the original size. Bit of momentum there on price. So I won't add short yet. Now we're struggling a bit for momentum, so I add short. Anything higher, I'm out that long for gains. I'll close that one as well. And we're off. Now I've got the option to add short again. I'm spacing my shorts out a bit. Okay, now this is $28 down. So because we got momentum to the upside, I can actually consider just adding long, closing out the former short, and there we are. We're now in net gains overall. I can put a short 0.04 here, and that overhedges the former long because the long's very high. But I can add again, kill that off, add again short, same size, nice drop, exit for gains. I'll light hedge this one early. Now, if you're watching this, you're thinking, wow, this is all too quick. Okay, I can actually kill those two. Just remember, you know, like I said, there are a lot of rules to it, but the basic idea of these videos is just to give you an insight of really what is possible if you stop using stop losses. Because if you imagine all the entries I've just made, you know, over this full period would have all been losses. Maybe not all of them, but a lot of them would have ended in loss because I would have had my stop hit. But if you don't need to stop out, and even better, you can survive any market move with a very low drawdown, you know, then you're practically invincible. There's not much that can really kill your equity and cause a margin call or anything like that. Okay, so just bear that in mind. You know, it's got a few rules, yes, but you will see no matter what happens, as long as you hedge in proportion to your former entries and overall risk, you become, you know, like I said, invincible as a trader. And anyone who's wondering as well, this is FXtester6 is the program that I'm using. Kill that. And now we're in what we call the zone of full concentration, if you like. I'll add a light short. You can now see where equity drawdown is positive $230. Really no threat on drawdown at all. Maybe a couple of $100 we saw at one point is nothing compared to the rate of profit. And that's typically why my rate of, I think they call it rate of profit or something like that, profit factor, that's it, is so high on my prop accounts. It's just because the hit rate is so high. Obviously, I'm hedging as well, which allows me to take more entries and take more trades. But obviously, my closing in loss rate is so low. Okay. And it's so low because I don't close in loss. If I do close in loss, then I'm closing out with money I've made. And it's sustainable. Now, I'm going to add again lightly just because we're hitting the lows. Okay, so we've got a good price. However, I'm just going to exit that former one with those gains. We've got a good price, but we are subdued. Market's still struggling to rally. So light short there is a hedge of this one. So I would have been out this. This would have been a loss, but it's not. Okay, it's not a loss. Yes, I'm temporarily down, but the gains I'm taking are exceeding that. Okay, and at any time I'm hedging, which allows me to just sustain my equity anyway. So I'm going to add with this because there's some momentum here. I would say the key for all of this is the fact that at any time the drawdown is, you know, it has been, as you've seen, you know, sub $200. Imagine trading, you know, in a way where the drawdown is sub $200, and it's actually positive if you look at the equity. I'm in plus. Okay, so that makes it even better. So I'm going to do a 0.05 now because of much lower price, likely a market maker stop. I'd be looking for a swing long now, typically, depending on how the price action looks. So now we're picking up drawdown, and I can hedge here. So I'm going to kill that. I'm going to hedge to protect. I don't want to have massive longs in the market anymore. And I would like to take that several times, but I'm just too slow. There we are. Exit the hedge. So I've hedged again. Still haven't closed the long, but I'm still in and out for gains. 0.02 because the level is not as good. 0.03 to add again. So now I've got 0.1, as we discussed, max size. And really now I don't, okay, so I'm going to exit that. I don't want to hedge because the drawdown is just minimal, there's no need. Exit another long. Okay, and you get so much freedom. Oh, we don't want to do that. You get so much freedom in having a low entry size versus equity. A lot of traders don't understand that simply if they just have a very low size, It just removes the stress. You don't have to worry about the price going the wrong way continually. You know, and like you will have seen on my EuroCAD video, you know, I filmed a series where we go 2,300 pips the wrong way, and it doesn't even matter. You know, I'm still ending up in gains on a fall that magnitude. No stop losses. You can go all that way to the south side and you still end up in profit. I mean, where else can you do that? Okay, I'm going to add a larger size now. Well, whatever fits the piece, really. And now I can look to add some short side exposure. Okay, so I'm going to kill that one, exit, and take a short. That should have been a 0.02. Okay, but nonetheless, I'm out. And a pop up with some strength. Now I can add a 0.02 just to keep. So I'm just continually hedging these longs and creating profit. Now I'm going to spend a bit on that one to get rid of it. So there you go. Instead of using a stop, I've extinguished that loss. And that allows me to survive a bit longer because what I've done is I've stemmed the flow. The idea of hedging is so that you can make profits and use them to extinguish the former losses you're holding open. So instead of stopping out altogether, you're basically, you know, artificially stopping out because you're putting a short in play, for example, while you've got the longs open. Now, I just took $21 on that. That's 1/5 of that loss. So all I need to do is make that 4 more times and I can close out something that I got wrong effectively for no loss. Okay? And that is the beauty of this. So to be clear, you need full plans, risk management plans for your sizes, your portfolio, the assets in it, the drawdown per asset, how you're going to deviate sizes and the spacing. So how often you're going to buy, how often you're going to sell, the proportion in which you're going to do both. Do you understand sentiment? Do you understand the way the market is, you know, falling or rallying at any time? Do you know how to deviate your size to fit? Okay. So anything under this, and I'm going to space out my longs because we could see it lower. Okay, a little drop, now a bit of weakness. And now I'm going to hedge on any significant pullback because my drawdown's growing. It's just under, my equity drawdown is now under 1%. My target is to keep it around 1. Well, under 1 if I can. Okay, so any little pop again, I'm just going to protect with a hedge. And if we just keep going up, I'll kill those longs. Okay, so a little bit there, not a lot, but, you know, gains nonetheless, as I say. Just gives me the chance to protect a bit more. You know, equity drawdown again, if you just check it, still lingering around 100K. So we're not in gains yet, but we will be on a swing. And if we don't swing, I can sustain the fall because I'm hedging continually. Bigger push, something like that, great. Gives us a chance for a rebound potentially. And to remove some of those longs, I'm just going to take one off because of the risk. And anything higher, and I'll do the same in the long, and I'll add short again to hedge those former longs we took much earlier. Okay, so although I've been wrong on them, it has not cleared me out. So I can actually kill that low short there with the gains taken already. And now the market's stalling, so I'm going to react to that price action. Get out of a short there, add a long, because the price is supported to the upside still, but now you can see a little bit of rejection early, add a short. Okay, bit of a pull down would be ideal. Yeah, there we go, kill that. Again, price still supported to the downside, that's why you're getting wicks. And anything back to the lows I can consider adding because I've collected enough gains to do so. Okay, so market stalling a bit to the upside, going to add short. See if we can get any momentum down. Not too much there, just let it run. Then again, a bit of supported price, let it play. Kill that again. Right, so the rate of gains I'm taking is decent. Okay, we're not really falling enough there for me. If we get a good pushback, I will probably rebuy to immediately hedge that short. That's now out of the money. Just in case we keep seeing momentum. There we go. Cool. There it is. And I can use that to extinguish this. And I'll add again long on a decent. Well, I would have liked that, to be honest. Okay, I'll take a tiny piece just because there's hardly any pullback. Okay, I'll add 0.02. Oh, no, we don't want to restart. Okay, kill that. Okay, now price is struggling, so I'm just going to hedge immediately. Kill that off. And the protective hedge is still in play. Speed up. Short that. Exit. Okay, so I want it a bit higher, to be honest, because there's not that much price action in the way on higher time frames. Okay, great. Here we go. So we've now got the chance, if we wanted to exit everything. Okay, and we'd still be in net gains, which is exactly what we want to do. In this instance, I won't, because I think you'll get higher. Now, at this point, a bigger drop would be ideal. I am going to short in a sec. I think I'm going to take it now. Okay, so I'm going to kill this long, take some of that away. Nice fall to hedge most of it back. Okay, and then now we're free pretty much. I can then take another 0.04, so we've basically got nothing in play. Okay, bigger position there because it's spaced out nicely. Okay, now bigger fall would be ideal. There we go. 22 out there, and there you go. Out of everything for net gains on that whole cycle. Okay, so he fell and fell and fell. Wasn't a problem. And the reason why is because if you look at all of this, you can see there's ebb and flow. Now, typically markets will move like that to some degree on all time frames. That allows us to sustain the gains to go from 0.984 all the way to 0.87. No problem. No drawdown practically, and safely move through that and then up to the other side. If you do that across a portfolio on all assets, you can stimulate gains continually. Now I would look to buy and continue up. Thanks for watching, guys. Don't forget, if you want to learn how to do this on a diverse portfolio and trade for income, go underneath. See you in the next one.